Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's a Friday. Not too big of news this morning. Canadian CPI, things like that. We do have Fed speaker at the moment, though. So, Goolsby kind of talking right now might move the markets around. While he's talking here, let's go take a look at the charts. So, here we got the 10-year Treasury. A little bit of a move yesterday that came back. Nothing too interesting happened after we stopped trading. Here in the overnight, they're just kind of retracing that. S&P 500, the bottom of a range here. Oil, hot top of its range. Gold's still up there, not too bad. Silver taking another little bit of a pullback though, not good for silver. Copper, also kind of similar. And the Japanese yen, experiencing a little bit of uptrend this morning, but it does seems like they still haven't quite decided what they're going to do with the dollar. And Bitcoin gave up a little bit of its gains yesterday, but nothing too big. So, I don't know. I don't think that we should expect anything too crazy today. Next week, we basically, we do have today we do have the options expiration, so that's a pretty big deal. But then next week, we do start getting some flash PMIs. Flash PMIs next week. GDP on Thursday, core PCE. So PCE is a pretty big deal. And end of month flows. And then after that, there is quote unquote So apparently the day that the tariffs are supposed to go into effect is Donald Trump is now calling it Liberation Day or something like that. Like, I don't, that particular bit, it just seems particularly great. Like, naming the day that the tariffs go into effect seems a little bonkers to me. But let's see what happens. So, yeah, Goolsby, before judging how monetary policy reacts to tariffs, the Fed needs to know how long the tariffs last, possible retaliation, and pass through to consumers. It's kind of funny. It kind of sounds to me like Goolsby is kind of talking a little bit hawkish. Yeah. Imports are only 11% of GDP, so one-time tariffs that are not followed by retaliation are more likely to be transitory. Yes. Financial markets are signaling that the risk of a recession is growing as tariff-related uncertainty and indicators of economic weakness spread across Wall Street. I do think that a recession is more likely than it was before, but still unlikely. I don't know. Like, the whole thing is with tariffs and everything, you've got to do all of this posturing and everything. But, in the end, it's in everybody's best interest. It's to everybody's advantage that they make some sort of an agreement. So I kind of think that the market overreacts to it, When it actually affects the cost of things, then maybe I can look at it and see how far it goes, Plus, then on top of that, a lot of media has just been freaking out because the S&P 500 has been down. And I've kind of been sitting here like, well, it's about time. Like, good grief. So. But that's just everything when it comes to Donald Trump. Is just overreaction to everything that he does. Because media has really whipped the far left into mass hysteria, and a pretty good portion of the country is kind of understands what's going on and is sick of it. But that doesn't mean that there's not going to be long-term impacts from his policies. And the thing that makes it complicated, well, I just recorded my video about complexity economics, so maybe I shouldn't get into this stuff too deep until I release that video. But the like what he's actually going to do is there's a lot of detail in there. And then how the world reacts to those things is a complex thing that I really don't think we have a very strong ability to predict. The panic they've sent the left into is actually crazy. Well, when you look at like the consumer sentiment survey and the inflation and the problems that the consumer sentiment survey is expecting, yes, it is actually crazy. It always, it kind of seems like on Friday we kind of trend towards this subject, don't we? Like, it seems to me that social media was, to some extent, intentionally created by government. And maybe some of the problems that we have with society and social media are a side effect of how the government has kind of pushed that. Because like there's this whole thing about like the government being involved with the creation of Facebook. I don't remember how it went through, but like I think that the social media was kind of viewed as a tool that's like, yeah, it was a DARPA project. That social media was a tool that was like, oh, we can use this to influence our populace. And then what happened was when they put it into practice, it kind of became this beast that they couldn't control. Is kind of what it seems like happened to me. And so that's what's going on here, is that social media has given them this ability to influence people. And then politicians abused it like just terrible. And until the left has become just an absolute clown show. I mean, when you get back to the more serious political sphere about it, right? because everybody's talking. The Democrat Party has failed us. Isn't it so crazy to hear the talking heads on TV and the political analysts and everything go from Joe Biden is the greatest thing ever. Kamala Harris will be such a great president, and the Democrat Party is set to dominate U.S. politics for the next 100 years, and the Republican Conservative Party is going to die out because of demographics and yada, yada, yada. To all of the sudden, all of the guys on TV, we need to completely rebuild the Democrat Party. It's completely failed us. Yeah, from joy to despair in 0.3 seconds. It's absolutely crazy. But the whole thing is that the Democrat Party has been run by mass hysteria. And so the reason that the Democrat Party has failed so hard is because they were allowing themselves to be controlled by that. I said this many times. Did I not say this many times when I said I'm really not worried about the certain groups of people, whatever the controversial issue was. I'm not really worried about these guys taking over the country or taking over popular culture, because I know what they're doing will be ineffective. And in the long run, what is effective will win out. And the Democrat Party embraced ideas that turned out to be very harmful. Man, is the S&P 500 here falling because of Goolsby? Because the treasuries haven't moved much. The thing that I think is so wild, though, like when you talk about emotional whipsawing like that and things like that, what I remember when I was a kid and we were like arguing on forums and everything, it was like you always really had to know what you were talking about, because people would catch you and just absolutely savage you for the smallest little mistakes, you know? It was like everybody that was arguing on the internet was a little bit autistic. And so you kind of had to be autistic in your fact checking yourself and your grammar and your spelling and everything. Or people would attack what you wrote rather than the substance of your argument. And it's kind of funny because, yeah, the spelling error would nullify your entire argument. That's the old internet that I knew. Now it's like nobody cares. Now it's like if everything is like perfectly spelt and you use sophisticated language and everything, people don't want to listen to it. How did that happen? Oh, it was like when Facebook and Reddit took over, the internet became a completely different thing. I don't get it. It's just the culture completely changed. And that's what I was kind of getting at, is like, kind of seems to me like that social media was kind of intended to be like that to some extent. They chose the formats that they did and everything, like these things where you have a curated feed by an algorithm, and comments aren't even necessarily shown to you in chronological order. Comments aren't allowed to be very big. You don't get a whole lot of customization around your post. Like, yeah, you get your profile picture and it's just this teeny tiny little icon, right? Then these were all things that were done because the old internet on the forums was not as controllable. And I think it just kind of fits into like this larger picture that I'm seeing about the world and in economics, that these are self-organizing complex systems that have emergent behaviors at the high level that can be difficult to predict. And so you get these people that are like, well, if we do this, this, and this, those of us with the money and the power over the algorithms and everything can have this huge degree of influence over what people think and say. And they never thought that would result in other people taking advantage of it and like some of the stupidest, most base level impulses in humans taking over. And then they're all mad when that happens. So go back to the old internet. Old internet where posts are long, the whole thing is designed for you to be able to write a long post. People know, like, there's things about your profile that are shown with the post so that people recognize you, so that commenters on the internet become prominent commenters, essentially. Different world. So when it's like, oh yeah, there's that commenter, there's that famous commenter again, they have a reputation to uphold. We're more careful about what they say, you know? Treasuries did shoot up there, but they're coming back. S&P 500 seems to be bouncing a little bit. That move in the S&P really was quite a move. Seeing some predictors of a Black Friday crash on Twitter? No, probably. So what I would expect to happen: $4.7 trillion OPEX. Well, but so what happens with options expiration? We tend to get pinned, right? So that means it's hard to move, but if we do move, then all of these guys have to re-hedge themselves and it exacerbates the move. So seeing us move from 5,700 to 5,670, so we've lost about 30 points here. That is pretty significant, and that is something that could lead to that sort of a situation. But it's before the open. I don't know if 30 points is enough. So, I don't know. Let's just kind of wait. Today we'll put the Black Monday crash of 1987 to shame. See, that because it's options expiration kind of says to me that the people saying that don't really watch this stuff very often. They're just looking for something significant about a day to kind of give justification for the doomsday scenario that they desperately want in their head, right? If there's going to be like a crash sort of a thing, it's going to happen after the options expiration on Monday, right? The way that it tends to go is all of the options are cleared out. Market has the ability to go where it wants to go. People can take on new positions, and when they decide to turn down, those can be super, super ugly. Today, Black Friday crash, that just doesn't make sense to me. See, that stuff every day still hasn't been enough. Well, so I wonder how are you seeing that stuff? It sounds like you're saying it's on Twitter. But like, what are you watching on Twitter that shows you those, right? Oh, and that Def, you asked, and that's not what I'm asking. I'm asking like, were you watching a hashtag, or was it like a trending hashtag, or is this just a person that you follow? Retweet it. Okay. This is another thing with Twitter, is like, if I go on Twitter and I tweet something or I comment something, nobody cares. It's just like you're sending stuff into the void. And to me, it seems like that Twitter was really created so that existing celebrities could have more power on the internet, because in the old internet, nobody cared who you were. Celebrities didn't have that. There was this period, that seems to me, where like pop culture kind of died, like people didn't care about it anymore, and then Twitter came along and revived it or something. And so I'm always like, Twitter just doesn't make any sense to me. How are you guys using this? How are you finding things and finding stuff and getting engagement? I don't get it. What do you do when a society reaches the point where its leaders just follow the ebbs and flows of online sentiment? But don't you think that that's maybe a little bit contradictory from what we had just said? Because wasn't the thing that I was just saying that it seems to me that a lot of things on the internet were set up so that certain people could have more power and influence over public discourse, but then the politicians are just following what that public discourse online is? We have created a chicken and egg problem, haven't we? I was returning. Well, yeah. So the issue I see is that in society today, there are a lot of ideas that come out, and people will just go full bore into pursuing these ideas and throwing all caution to the wind. Like, and the policy around transgender issues is really is a pretty good example of that, because they were basically sorry, what is the word? Recommending. They're basically recommending transition in all cases, and all of the science around that was kind of shoddy. And now you're getting new studies coming out suggesting that it's a really bad idea, that it's really harmful to those people, right? And it's really bizarre to me, in particular, that It's really strange to me in particular that the people that do this, that like go full bore into this, are Democrat people that tend to be the ones that are like, oh, we need to use science and things like that. But then they end up, endorsing shoddy science and using, falling into confirmation bias and things like that all over the place. There's been like 3 studies now on this saying that the meta studies and stuff suggesting that the mental health outcomes for transitioning individuals is objectively worse when they transition. So I think, why is the left suddenly on the 20% side of every 80-20 issue? I think it was the illusion of popularity delivered through. Yeah, maybe. Well, so let us try to. I think that on this case, though. So here's the thing, is that I do think a lot of our problems come down to complexity, right? So again, what complexity means that when you have all of these different agents and they're all individual actions, right? There are millions and millions of people and individual actions online, and that is very difficult to study and look at. And kind of what happens is through all of those tiny little interactions, you get higher level behavior, emergent behavior that comes out at the high level that you can't necessarily predict from the individual things. And so how do you resolve that? What kind of tools do you use to do that? And the way that we handle that in complexity economics is agent-based modeling, right? So in this particular instance, I think that it would be useful to try and do like an exhaustive look at what are those issues, right? Because when you say the left is suddenly on the 20% side of every 80-20 issue, which ones? So I think that there was the transgender issue, and there's like a number of sub-issues. I think that the most prominent one, the one that the public seems to be like most unified on, is that transgender women should not be participating in women's sports. But what are the other 80-20 issues that they've picked? That the government should spend more money and that we should have more government. Okay, deportations. Because I think when you dig down into each one of those things, it ends up being a little bit more nuanced than that, I don't know if the other issues are as clear cut as in terms of like the public's perception of it. Yeah, when I say it's more nuanced, I mean like the public's perception of it is more nuanced than that, right? Like on deportations, I kind of think that one is maybe a little bit of confirmation bias on our part, right? Because to me it's people that are criminals should be deported, especially ones that are like actively committing crimes and weren't supposed to be here to begin with. And I'm not just saying like that their only crime was that they're illegal. I mean, like, they were illegal immigrants and then they started murdering and stealing or something like that, right? Yeah, they should be deported. And I think that the public generally does see it that way, but that doesn't mean that the public agrees with the Republican stance or the Donald Trump stance on immigration, Similarly, when it comes to government, yes, everybody would like their taxes to be lower. Everybody thinks that the government has wasteful spending. But then when you come down to, okay, so should we get rid of this program? Should we get rid of this program? And then it's more nuanced than that, right? Then all of a sudden, because most people support all of these different programs. Like if you say, do you support the Department of Education? I bet you that most people will say yes. Well, I tell you what, looking at the market, the equity indexes have moved down a little bit further. The treasuries are still kind of holding where they are, but the Japanese yen has moved, and the dollar is on a pretty good trend as well. So that's kind of interesting to me. I'm seeing signs of like flight to safety, but it's not coming into treasuries. That's worth noting. So we're getting another Fed speaker, and I think that is just all of their comments kind of coming, like pre-planned comments. Let's see here. It's actually interesting, generally speaking, the seeming degradation of political influence spheres, when they power trip, they go on after a winning start to finally hit infighting and purity testing starts to flare, cohesion breaks down. Yeah, well, I think it goes back to something that you were saying earlier, which is that it really seems that it was really Obama was the one that kept things going. It was really Obama was the one that kept things going. And, you know, after Obama had been out of power long enough, then all of the problems with what Democrats are doing reared their ugly head. And most of those problems were problems created by Obama himself. We need to roll over ES. You're correct. I never rolled over the DOM. Much better. So this is one of those situations where I think that it's really, really easy for all of our kind of like the metrics that we have in our heads, like what we're comparing to and everything. It's really easy for them to get off kilter because this move down in ES is pretty significant. I mean, that's 40 points. 40 points is no joke. 40 points is pretty significant. And I don't know, man. Like, it did happen when Goolsby was speaking and everything. But I didn't hear anything in there that I would think justifies that big of a drop, you know? I'm coming through on Zero Hedge, and one things I see is QT taper now. What does Powell know? Why are they tapering? And there is something going on that we haven't talked about, and that is that there is a ton of debt that has to be refinanced in 2025, and a big chunk of it is coming up here in Q2. And there are concerns that could kind of all come together and create a liquidity crunch at exactly the worst time. That, like, just going into the summer, you could have a liquidity crunch, and a liquidity crunch like that can be something that can cause a recession. And then you add all of the other problems that or let's say economic volatility that we're having right now due to policy uncertainty and so on and so forth. That's absolutely something that could be a problem. I've been wondering about is if traders are trying to jump out Fridays due to bad sentiment over the weekend with the new government. Well, I think though the thing is it's options expiration. I mean, I think that everything that we talk about kind of along those lines. Oh, by the way, I'm just realizing I didn't turn on our algo. We should do that. I think that we should try putting it in the context of options expiration, because like they should be hedged going into the end of today, and then, you know, those positions expire. It's not, you know. I don't know. A 40-point drop just because people want to get out of over the weekend, I don't think makes sense, especially not the timing of it before the market opens and everything. Good morning, Ann Steffa. I've been wondering with the stream and the title of the stream if I should try and change the title of the stream to something like Live Financial Markets and Economic Analysis or something like that. So I was thinking about this conversation we had the other day where I was, I was mad, like, why aren't you guys asking about the Federal Reserve meeting? Because that's the only thing that matters today. And somebody was like, well, why would I care about your opinion about that? And I was like, well, then why are you here in the first place? What is it that you thought you were going to get on this stream? That's kind of like a little bit mind-blowing to me. Okay, maybe people think that because it's, futures trading DOM, that all I should be talking about is trend lines and or patterns on the DOM, which is kind of silly. It's not an effective way to trade, but lots of people that's what they think. So maybe if I put in live, having the title be the event of the day. Well, I do often try to put that in, like if it's non-farms or whatever, or if there's a particular subject we're discussing that I think will attract people to it. Yeah. But I'm just thinking right now, I say the instruments that I'm trading and DOM order flow and then the date. But what if I just completely changed that and I said live financial markets and economic commentary? I guess we can just do that. Live financial markets and economic commentary. Would that be a better title? I don't know. Something happened kind of weird yesterday because we were talking about is it a good thing that NinjaTrader got bought out by Kraken? And what usually happens is the people will slowly filter in, and then we'll get to peak viewership sometime a little bit after the S&P 500 opens, and then it just kind of stays there. But yesterday, the viewership just kept steadily going up. What's with that? Was that simply because I put in the title about NinjaTrader being bought out? I don't know. Another thing that I find interesting, and Steffa says, yes, I think so, is that like the total views on the live streams seems to be pretty consistent, but concurrent viewers has changed. So is it the case that like YouTube sends a certain amount of traffic our way no matter what, and I'm just so boring that they don't stay around, you know? It's actually good. I think we can trade cryptos. Well, you already can trade cryptos on Ninja, actually. I know. The thing that's, again, interesting about it is that they pretty explicitly said that what they want is the FCM. So all of the other stuff is I'm not even sure if they even care about it. Yeah, the FCM, the Futures Commissions Merchant. So in the futures space, like you probably think of your broker. You know, that's your broker, that's your connection to the market. But in futures, a broker is really mostly just to introduce you to the FCM. Like the broker handles the marketing and the technical support. And the FCM is the one that actually like has the relationship with the exchange, essentially. So the FCM is the business that's a little bit harder to set up, and that I think that they're buying, or that they say that they're buying, because Kraken already has their own trading platform and tools and things like that don't seem to match up at all with adding NinjaTrader into the mix. So I'm pretty sure that it's primarily that they want the FCM. But then at the same time, that doesn't make sense, because the whole thing with the FCM is it's been set up to basically be an FCM just for NinjaTrader. And the whole thing is that the platform has kind of been forcing you to use NinjaTrader brokerage. And, you know. Building a charting platform is a simple part, but it doesn't provide much income in comparison. I don't know if it does or doesn't, to be honest with you. Or not that it does or doesn't. I mean, building a platform, there's a lot of money in a platform. There is. I don't know what it compares to the FCM and the brokerage. I kind of always thought that NinjaTrader makes more money from selling the platform. Like they make more money from selling the platform, and that's kind of why they started doing these other things, is because they want that other bit of income that is, has different qualities, essentially. Because if you're a platform, and you're a platform where all of the money is up front, right? They don't have monthly fees. Then you will get this kind of sporadic, like there's going to be more people that are going to start trading at the beginning of the year and in September. And other periods are going to be slower. I figured that for most... Well, for an introducing broker, commissions and fees is all their income. But you notice that that a lot of those brokers are kind of going the other way too, right? Like they are partnering with platforms, if not offering their own specific platform. Diversifying income, essentially. Do you know of an open source trading platform? You know, I seem to vaguely recall seeing them, but I don't think there's a popular one that's like widely used or anything. I honestly, I don't think that open source is a really very good paradigm for doing anything in the trading space, though. What? The unemployment rate for Americans aged 55 and older was 3% as of January compared to 4% for all workers. Huh. E-mini's still selling here, man. And it's not open yet. How good do you think your news event judgment is to be able to train a text and or audio to text news? As in, if you trained a model, what do you think would your win-loss rate would be? So the issue is, as we were, was it yesterday that we were talking about this? The issue is that the actual text of the event is not the only piece of data that you need. That's the problem. So if we had the event text and I said 5 different things. Yeah. I mean, if I had all 5 of those different things in there, what would the win rate be? If the algorithm was like co-located and all of those sorts of things, I think you could get a very, very high win rate on those. I mean, I think that some of these algorithms that like hit the market right after the market hits, I bet you that they probably win 60% of the time. I don't know. I don't think that it's practical for us to make right now with the resources that we have available, but I do think that you could put something together like that that could be pretty effective. Yeah, I guess the ones that we see actively hitting the market probably don't hold it for a minute, right? I also think like another thing that we didn't talk about that I think that you would probably put on there is that the model should try to come up with what it thinks the news is going to be before it hits. You know? I think there are probably some hedge funds out there that are using alternative data sources to predict what the economic numbers are going to be and making money off of the economic numbers. And especially over the past year, we continue to see moves going into those economic numbers that often predicts the results of them. So it does seem to me that there are people out there trading it that seem to be trying to predict that number and are pretty good at predicting it. They're not 100%, but they're pretty good at it. I honestly today don't really feel much like picking up any projects. I recorded that video that was the one that was like, okay, after this, probably we reduce the pace of output back to what it was before, and maybe take a little bit of a break, but focus on other things. Maybe focus more on reading, for instance. And I feel a lot more relaxed. Okay, so here's the open. Treasuries are selling. Man, that drop, there's some weird stuff going on in the 30-year today. The 10-year looks like an overall buy. But the 30-year looks different. Excuse me. And as that's happening, there's steepening in the yield curve. So it really must be, you know, buy the 10, sell the 30. And that sort of a thing is often a sign that there's something brewing out there. Conor McGregor announces run for Irish presidency. Of course, the internet really was pushing for that one for a long time. So. $56.58 triggers. Oh, is this somebody on Twitter say that? Oh, well, here it is right here. Oh, they touched it. Doesn't look like the market cares too much about that particular price. There's a big old order at 56.50. It's a round number, so you'd expect to see that, right? I'm curious why the treasuries are behaving the way that they are, because how is it that we've had a 50-point drop in the S&P 500 in the hour before the market opens, and the treasuries have hardly done a thing? Like, what? Like, when you put it in that context, it's kind of a little crazy, isn't it? Is your multi-time frame indicator? I think so. I think it's there. Oh, do I have it? Not have it in the general suite? Maybe I should put it into the free tools. I don't know why it wasn't. No, I don't think I put it in the free suite. I might have had it as a separate download though. Here's the multi-period candles. I think there was this other one with the I don't know what you call them, traffic lights sort of thing. That's a different thing, because that was like different drawing code or something. I don't know. I'd have to go and look at it. That's the market analyzer one. No, that one is the candles. I think we're talking about, let's see here. So somebody asked me about this the other day, and I think I put it up on the Discord. Like, I think it's there, because basically, some of these things are so old that like the Discord downloads aren't there anymore. Discord has cleaned them. Like, I think it was because it wasn't completely mine, but yeah, TFC and TFC levels. This thing right here. And the levels is basically telling you at which point it would become positive or negative on the different time frames. Because I think it was labeled IRTFC, wasn't it? There it is. Yeah, it was in the TGN suite. That's why. No, it's not free. So TGN is Top Gun Note. It was a guy named John Bottomley, and I made a couple of indicators for him, and I made it for him. And I think he might have put it out for free. I don't know. I'm looking at this. April 18th, 2020. I'm looking at it to try and determine there's a couple of things I'm seeing that make me go, oh, I wouldn't want to do it that way. There's a couple of things in here that make me go like, I don't know if I should make this an free indicator either, but if you message me on what I'll do is, I'm pretty sure it's on Discord, but if you message me on Discord, I can pass it over to you. I don't know if I want to, there's a couple of things that make me weary about providing it as a book, because then I have to support it and stuff like that, you know? Coming back up, the S&P 500 is since the open has been, I would say, quite choppy. There was a pretty solid buy impulse on the open. Wonder if it slow grinds higher for the rest of the day. I'm still stuck at why did it drop? It really felt like that it had something to do with like the Fed comments, but I didn't see anything in Goolsby's comments that really seemed negative for the S&P 500. I didn't see any news headline. It definitely, the timing of it seems to coincide with Goolsby's comments. I think we could probably say that it was Goolsby, or at least that's our best guesstimate. But I'm just kind of looking for some analysis of what it is that Goolsby said, right? Was it inflation? Well, Goolsby made some general comments on economic policy and current conditions. For instance, pointing out that, in the business surveys that they're doing, that consumer sentiment does seem to be following through into people changing their behavior. I guess another thing is that if it was quote unquote inflation talk, why aren't the treasuries moving with this? But maybe it is an options expiration specific thing. I bet that when Zero Hedge does its summary of the day, they'll probably have a good explanation as to why. There maybe be some flows and options and things like that that might give us an idea of what was pushing it. Do you see a little bit of correlation, like the S&P 500 starts inching back towards the low and the treasuries backed off of their lows? But it's just not. It's amazing how the market makers can hold. I don't think that that's what's happening, Octavius. How do we know that it's the market makers, what the market makers want? You know? So if we're looking at MBO data, I would kind of think that those large orders are probably less likely to be market makers. Nah, I don't think that's true. I mean, I don't think that's true, but well, we don't have any data to suggest that it is or it isn't. Yeah. Don't large traders split orders and spoof anyways, so MBO data isn't always as accurate as you would hope. That's true too, Ben. But I think that the market makers by and large split their orders up. I think that, you know, if you have large orders that are larger than the other stuff that you're seeing out there, that's something that they want you to see, or that they don't care. But I was always believed that the market makers were the ones that split everything up. Or we're just saying something that, like, requires too many assumptions to say, you know? Because first you're saying this group of people are them, and then you're saying this them want this, and then you're also saying that this is happening because that they want it. So it requires like 3 assumptions that we can't really prove. They're not putting anything up from 113.5. Well, what instrument are you talking about even? None of my instruments are anywhere close to a 113.5. unless you meant to say 111. Okay. So we're talking about a 111, 09 to 05-ish. And you're pointing out that there's not any large MBOs in that area. Well, one thing I can show you is that the cost basis basically has the 2 points between the two sides is between essentially 10 and 05. So that might explain. But again, don't have any evidence to suggest that those big orders are market makers or not. Kind of feel that a drop to 05 would be a significant thing. I would be really surprised if there wasn't a lot of volume traded at 09.5 and 09 to get down there. You have evidence to suggest they're big, that's true. Well, 500 isn't even necessarily big either, right? 300, 1000. But do you get my logic here about so again there's 3 assumptions that you're making. One is that the large MBO orders are market makers. 2, that the market makers want to have a certain thing happen. And 3, that certain thing is happening because of the market makers. So those are 3 things that we don't necessarily know. But then more specifically, I think that if you're a large buyer or a seller, you're going to use combination of market orders and icebergs to execute your trades. If you are a smaller player that is hedging, and you might be hedging like maybe 1,000 contracts, that's something that you can probably just have one order sitting somewhere to get filled. If you're a market maker, you're really fast, you're a robot, why wouldn't you split your orders up if you had the ability to? And so my assumption, not assumption, because I mean, it's not something that I ever really pay attention to or think about, right? But my guess has always been that the market makers mostly split their orders. Like, it doesn't make sense to me that it would be the market maker that's placing the 1,000 lot there. 1K is like 25% of the average contract amount on it, so it's big. Well, when I say big, like to me, big is like 100,000 contracts, right? like when I say a large player. A large player is going to be buying like 100,000 contracts. You're going to be in the tens of thousands. Yeah, over 300 MBOs don't usually pull. So I certainly think if we had well, let's close this now. If they started to trade 08.5, I could see 05 very easily. I would be really surprised if it just slipped through it on like hardly any volume, though. I suppose another thing is something that I'm seeing right now is I feel like that the trade in ZN is too obvious, right? Isn't the obvious trade that it stays in the range and you buy it at 10 and it comes up there? But that's exactly why I'm suspicious of it, right? S&P 500 still hasn't decided what it wants to do yet, though. It's still just going sideways. But, I think for this options expiration, there's this whole game around what the S&P 500 is going to do that we could possibly game out. I do think at this point, the most likely scenario is that the rest of the day in the S&P 500 kind of ends up being like retracing the down move. But in the treasuries, I don't really think we have a whole lot to go on. Don't think that I really have the only thing to go on that I think we have is that the knob spread seems to be steepening. And that's all I've got. And it might not be the knob spread. It might be more it seems to be more concentrated in the 30 than any of the other ones. Okay. So I don't know if I really have any kind of predictor of order flow that would suggest to us what the treasuries are going to do. And that would be like keeps the range sort of a trade. But it's just like this range trade seems too obvious. Seems too obvious to take. Oh, we got something from Waller trying to explain his opposition to tapering the pace of the runoff. I'd like to see that. At the most recent Federal Open Market Committee meeting, I supported no change in the federal funds target range, but preferred to continue the current pace of decline in securities holdings. Reducing the Federal Reserve's balance sheet is an important part of normalizing monetary policy implementation and reducing unneeded reserves in the banking system. Slowing further or stopping redemptions of security holdings will be appropriate as we get closer to an ample level of reserves. But in my view, we are not there yet because reserve balances stand at over $3 trillion and this level is abundant. There is no evidence from money market indicators or my outreach conversations that the banking system is getting close to an ample level of reserves. The committee slowed the pace of redemptions in June 2024 to ensure a smooth transition to the appropriate level of security holdings needed to implement monetary policy efficiently and effectively. I believe that pace continues to be the right one. If unanticipated disturbances to reserve demand emerge on the path to balance sheet normalization, the Federal Reserve System has a variety of tools to address such a development. Rather than changing our current pace of balance sheet reduction, the Federal Reserve should rely on those tools and develop a plan for how to respond to short-run strains if they emerge. Oh, they will emerge. Don't worry, Waller. Such a plan could be implemented swiftly in the event more reserves need to be injected into the banking system. Even with the decision to slow the pace of runoff at this meeting, a plan is still required should a disturbance occur in the future. While this is a procedural matter, good proceeds lead to good outcomes, and good contingency planning helps avoid disruptions to markets and to the FOMC's efforts to achieve our economic objectives. Royard, any view on the gold move? No. Well, I mean, on the gold move this morning, the sell on gold is... I have no clue. I haven't really talked about that one at all, but that's a pretty significant decline in gold as well. I mean, maybe that one is profit taking, right? Because the whole week we've kind of been like, moving up from 3,000. Yeah, I think that we've just got a lot of triple witching options expiration stuff going on that is difficult for us to model and understand. And so we just kind of have to watch and see how it turns out. And hope that it gives us some insight into future moves like that. You're not seeing the dollar move, though. I already said that, didn't I? Yesterday we talked about scraping Forex Factory. Yeah. If you ask ChatGPT, they make something that's pretty okay close-ish. I don't know. I've always wondered at, like, can I send the underlying requests that the page sets, and that seems to not work. Oh, you found one on GitHub. Okay. And like one of the things is that I don't use that one, right? I use Financial Juice. It works really good. Oh, okay. I wish they had an API. Benzinga? Yeah, I think Benzinga has an API, doesn't it? I guess I'm not being direct enough. I'm not that interested in scraping Forex Factory because I have found, first of all, when the number gets released, you have to hit the little button to get it to refresh. And then I found that when it really counts, it's slow. So it has not been an effective way to get that data in a timely manner. Now, why does it not? How does Citadel make market making? Well, Citadel makes most of its money from market making options. It's a whole different world because there's a whole modeling that goes on for them to determine what is a good price for those options. Oh, I see why it's having issues. is their options scraper program that can show big option trades in ZN. So I think if you wanted to do that, you I forget the name of the thing, but like when you go to the CME website, they have like all of these tools where you can kind of go and see these sorts of things. And there's like this one tool that you can pay like $200 a month for or something like that, where you can get live data about that sort of stuff. Who is the bigot? Who knows? In ES, who knows?
Block cell.
Wowzer. Well, it took a lot longer than we thought. They did fall through. I would say there was a decent amount at 09. But less there. And you're getting some size at 07, which is a little early. S&P 500 seems to be turning on. I'm seeing turns across the board. Huh. I have no clue. I think I just have to chalk this down to options expiration day zaniness, you know? Yeah, I would expect Monday to be wacky. Today, I'm kind of like, Does he tell us about the biggest? Well, I mean, maybe. Why does it matter? People not allowed to be curious? I think the reason he would want to know is, okay, let's find out who they are, find more about them, see if we can gain some insight into how they're doing it. But I'm going to bet you that the largest market makers out there are really just doing arbitrage between the index and the underlying cash. Sorry, between the futures on the underlying cash index. Right? If you have a data feed that gives you the index separately, there are strategies that when the futures in the index get too far out of whack, you trade it on reverting back to the mean. But you probably wouldn't be very competitive with that. I don't know. Maybe Falter wants some attention. What do you think would matter? What do you think matters then, Falter? What's the most useful piece of information that a person could have right now to help them scalp E-mini futures? To quote Socrates, I know that I know nothing. Well, yeah, because you think that anything that anybody wants to look at isn't worth looking at, so you would never go and learn anything. I don't know if he thinks what he's saying is like we're all going to think he's super clever or something, or what. I don't know. Okay. So let's just go back. So somebody asked, who is the largest market maker? Walter said those details about the largest market maker are not pertinent to everyday trade. It is not pertinent to everyday trades performed by the retail trader. I disagree. I think that a really great way to develop a retail day trading strategy is starting by understanding who all of the different players are in the market and how they operate. And if you can gain some insight into how they operate, like who the market makers in ES are and generally how their strategy works, that can provide insight into your own strategy. I am okay. Of course, I'm right. Tell you what, this little move, I guess we did kind of anticipate that it could come out the bottom here, right? Because remember I said, well, I think the easy trade is you trade it on the bounce, but that seems too obvious. So it did break. The way that it went about it is not how I would have expected it to play out at all. Let's see, we still got 30 minutes left too. You know a lot about the market makers and how they behave. Based on that, you should be able to scalp pretty okay, I guess. Well, so I think that you've got to know a lot about many different players, right? But I think that's really kind of the funny thing. And the point that I was trying to make yesterday is that an understanding of the market and what's going on, like how the different players behave, what are some stylized behaviors of markets that the market follows and things like that. When you understand all of those things, that does not lead to a profitable strategy. If anything, understanding all of that will make you want to not trade. When you understand all of those things, it kind of says you're pretty unlikely to be successful at making money as a retail trader, because you're missing something. What you're missing is information about what the future orders are going to be. And the things that I can look at or that we can understand and use to predict future orders, they can lead to good trades, but it's super limited. Super limited. It's like, okay, like I can predict Then we're going to have end of month flows that are probably going to be buying the S&P 500 next Friday. So that's pretty good. But that's like 1 day out of the month, right? 1 day out of the month. So when you have the information and the understanding of the market together, then I think you have a really solid strategy. But that all is contingent on your ability to continually find informational inefficiencies in the market to capitalize on, right? And that part is something that we don't have a whole lot of control over. All you can do is read as much as you can and try to understand things as best as you can, and then hope that it works out. Really want to know why gold bounced where it did. It's just it's a little unusual to have this many like seemingly interesting and odd moves that it seem to have nothing to do with each other, you know? He is kind of grating on me because, like, he's trying to talk like he really thinks he knows his shit and he's better than everybody. And then the stuff that he's saying, I'm just not really very impressed with. Yeah. When I talk about things like, you know, when you really understand the market microstructure and things like that, it really kind of suggests that retail traders shouldn't trade. It really does. I'm assuming that you already kind of have watched my videos and understand what the properties of the markets that I'm talking about, right? The markets are very statistically efficient and not very informationally efficient, and okay. He thinks that a move before 9:45 will not be sustainable? Oh, okay. I'm certainly going to be interested to see if there's any change after the European market closes. But that's another thing that I hate is cryptic predictions with no justifying logic given behind them is completely useless, right? That is somebody that's really coming in to try and promote themselves, and I hate that shit. Yeah, 9:45 my time, yeah. It's an hour from now. Although, is it, are we back in line with daylight savings time now? Should look that up. Okay. Closes at 9 o'clock my time. That's not right because it is 9:30. So it looks like that they are in line. Not with CET. Time and date. Oh, this one sucks. This time zone converter is not working at all. Wait, let's use this one. I got the cool one. Place our time zone. London. Oh. $4:30 will be 10:30 or 12:30 Eastern time. So the London close will not be until after lunch. So then that doesn't coincide with his 11:45 at all, but nope, I'm not going to be streaming in 15 minutes. But honestly, unless you have some sort of empirical evidence to present about these particular timings, don't really care. Sorry, wait. I had a way. I was supposed to deal with this differently. I'm trying to be better, guys. I really am. Wow, that really sounds like you have things under control. Well, circle back if you have any issues. You have empirical? Okay, show me. I'd like to see that. No, wait. He says he has empirical evidence. Now I've got to see it. Now I'm going to be really upset if he doesn't show me. Remember yesterday I was like, what if somebody came in and argued with me about empirical evidence? Remember that? And now here they are magically. You're growing mushrooms? You know what? For some reason, TikTok, every once in a while, is like, hey, Seth is interested in mushrooms. No, I'm not. Stop showing me mushroom content. I watched that video because the girl was hot, not because of the mushrooms. Good grief, TikTok. Did you watch the show on HBO about blue mushrooms? No. You know what this reminds me of, though, is there's this show that you can watch on I think it's on HBO right now. It might be on other platforms, too, called Scavenger's Range, that will make you feel like that you're on mushrooms. Holy crap. It's a cartoon, and it is like the wildest, trippiest cartoon you're ever going to watch. I was so captivated by it. This thing from Scavenger's Reign here, I'm putting the video up, is so... It is so weird. And it's just a thing that happens in the show. It doesn't seem to have anything to do with anything else. Maybe there's something going on here that, like, we don't have enough knowledge, or maybe later it'll become important or something. But because it seems like at the time, it seems like one of the most, like, this is the most significant thing she's ever seen in her life or something. And it's just like this super bizarre. Let's see. I don't know how else to describe it. It's super trippy though, right? Look, a little flower opened and it pulled a little tiny person out of it. And then watch what happens. The tiny person opens their eyes, sees what's going on, and is like, nope, I'm going back to sleep. Or maybe he was dying or something. Maybe he was supposed to, like, pollinate with somebody or something like that. And it didn't, and so now he's gonna die. I don't know. Or maybe it's just like, you woke me up, I'm going back. What is going on in this scene? Like, what is really actually going? It's so bizarre. I think this is one of the things. It looks like you, Uzi. I think this is one of the things that in a lot of more modern media, and especially I would say kind of like woke media, really misses, is that the world building is a lot in just the details and the visuals and things like that. And people get so caught up in like this cerebral stuff of like what happened and all of that sort of a thing, that they create these worlds that just don't feel alive. Like that's kind of what happened in the Marvel universe. Is I think at first a lot of it had to do with the way that it looked and things like that. And then after MCU, they stopped doing that stuff. Or sorry, after Endgame, they stopped doing that stuff and it wasn't interesting anymore. Oh, such a weird show. Such a weird. Did the people in the comments? What do people in the comments think it was going on? Oh, I didn't catch that at all. It's not inconsequential to the plot. Now the female character doesn't care about slowing down, but Sam does. Yeah. Yeah, this scene. This is very cool. It really is captivating, isn't it? See, these guys are saying that little guy is essentially me getting up in the middle of the night to put on the air conditioning. I do kind of wonder if maybe she intervened in something that she wasn't supposed to, and the guy was just like, well, I'm fucked now. Oh, well. Oh, okay. There was a short film before this. The big-eyed creature with the short lifespan reappears here. It was also in the original short film, although in a different environment. And the fact that it's a part of a plant life cycle and has to die in order for the plant to reproduce reminds me of how a certain species of wasp dies inside the fig plant's flower. The plant breaks down her carcass into nutrients so it can grow fruit. Yes, figs contain dead wasps. The more you know. So maybe the little guy does die. No, I was like, oh, is there going to be some more commentary about this? But no, people are in the comments are arguing about figs. See, this is the internet that I know here on. Maybe it still exists on YouTube. Okay. Oh, wait, sorry, this is a real question here. I don't trade on the DAM, but I find yourself really helpful in understanding how the market works. So I just want to thank you for... Oh, thank you very much. Yeah, well, you know, Pencil Z, I think part of it is like, the DOM is kind of like was a motivation to understand the market microstructure. And once you understand the market microstructure, there's all of these other things about the market that then all of a sudden make sense. And you don't necessarily have to completely understand that microstructure and everything about the DOM to have those revelations, or rather to understand those revelations, right? So it's kind of like, I feel like part of the channel is I'm here day trading and learning about the DOM and doing all of these other things so that you don't have to, because the reality of it is that if you are a retail trader and you try day trading futures, it's almost completely certain that you will lose money from it. It's just not, it's just not a valuable thing for most people to do, but somebody has to do it, and I love it. And I'm willing to do it even if I'm not making money from it, right? And so I'm able to claim all of those insights, and you can just get them from me, Falter says you'll see and not believe. If you have true empirical evidence, then that's the end of the story, right? Like, empirical evidence means I should be able to go back on my own and verify it, right? So if there is really some sort of stylized behavior, I guess the thing is, Falter hasn't given us enough information to really understand what that behavior even is or why he thinks that it's a thing, right? But if we really have 20 years of empirical data, and then I can go and I can duplicate it on that's the end of discussion. That's what the empirical evidence says. That's what empirical evidence is about. We don't have to just trust what somebody else says, or trust somebody's authority or anything like that. I can look at it myself. That's what empirical evidence is all about. I'm kind of really skeptical that he actually has empirical evidence, though, because he seems reluctant to give it. But maybe Monday, maybe you can give it, or maybe you can give it to us on Discord. You have the data. Is there anything we should point out here before we go? Well, I kind of think that Falter has been proven wrong here already, because isn't that a pretty good breakout? Like, they're almost completely retracing the move. A good 45 minutes before he said that they shouldn't be able to move. And let's see, is there anything else interesting going on here? Well, along with this has been this reversal in gold right here. And well, the treasuries are still on the downside. So it's kind of interesting, like, when the S&P 500 was falling, treasuries didn't really do much of anything, and then when they recovered, the treasuries fell. Okay. This move is likely not sustainable. Okay. I mean, what if it does? Well, that's a pretty quick move, right? So I think there is a good chance that it's going to do something like this. Something like this doesn't seem to make sense to me. No. Like it's okay to say, like, there is some sort of market behavior, and of course there's a distribution. So I can take the trade on that it shouldn't be able to move very far from here after this. And it's just that a stylized behavior that specific sounds extremely improbable from the way that I understand the market, why there would be an edge like that exists. I'm a little bit skeptical. And so, there's kind of the whole thing about the whole setup that kind of makes me think he's making stuff up or he's misinterpreting something. Like you could say, every day at 11:45 I take a trade, and over 20 years here's how it performs, sort of a thing. But that might not be giving you exactly the thing that you're saying, I mean, that's a side is that you have empirical results. We can misinterpret the empirical results. That's certainly a thing, right? Anyways, Spoos did break out there. So we'll see how it ends. And there was some good cumulative delta, and they've recovered the cumulative delta as well. I don't know if that matters as much on options expiration day, because again, there's going to be so much hedging in the indexes, right? So, but I do kind of feel, don't you kind of feel that how we end this week could play significantly into sentiment for the next month? So we'll see that. What would be nice is a video on how you use the bid-ask numbers. What do you mean by that? I mean, I kind of feel like that I do have videos like that. Which one? It was a recent one. Oh, here it is right here. Is order flow useless? That's where I talk about that stuff. I don't have to check. It's like I know the video. I forget what it was called or what it is. You finally have the pulling and stacking columns, right? Okay. There's a sequence that occurs at a specific time that forecasts statistically probable moves. Okay. Well, so we have to see the data on that. I just, that sounds like something you're really likely to have overfitted on. Is order flow useless? For me, it is on NQ. It seems to me, I really hesitate to say this. This is just my opinion, okay? My opinion is that order flow is less useful on equity indexes than it is on treasuries or hard commodities. The more outside flows and the more hedging that is occurring in that instrument, the less useful the order flow seems to be. I mean, I suppose like you look at the currency futures, because that's all hedging, right? Then the order flow is still useful over there. It's just you have to interpret it completely differently, right? But then there's this other thing, which is like NQ in particular is just an incredibly random instrument. And you know, I kind of wonder, is there really anything that you can really glean from NQ without having an informational advantage? And even if you have an informational advantage, that might be less useful in NQ. It's just so volatile. And I think that what happens is people are able to generate impressive results off of it just based off of pure luck, and everybody runs with that. Okay, well, just show us the empirical data. Anyways, I'm going over. By the way, while I'm at it, because I gave you is order flow useless? You know what? That video actually did pretty well. 1.2 thousand views is pretty good. And you know what? My other one, can you see market maker positioning? That one did pretty well too. But this one right here, the ultimate guide to cumulative delta, so far it's just doing okay. But that one's worth a watch if you haven't seen it. I paused the video at the perfect spot. Look at that. Ugh. That's how I feel sometimes, man. I did go through on the videos. Yeah, the next ones are the dollar index, market order imbalance. I had a video about how big your stop should be, but like the conclusion on that one is basically the larger your stop can be, the better. Or that you shouldn't use stops, essentially. That you should have a more flexible approach to when you get out. And there's some of these like influencer red flags, trader mistakes. We can make them, I don't know. Probably going to focus more on like screen share videos where I'm describing the indicators. And spend my time either on a programming project or some book reading, trying to find new stuff. Or maybe just trying to increase my job search efforts. I don't know. I was kind of during the stream, I was reading this thing where somebody was saying, oh, I did all this stuff on LinkedIn and nothing happened. And then I got way more interviews from ZipRecruiter. And I'm like, doesn't see the difference. I'll try it. It's the same jobs. That's another thing that pisses me off is they all go to the same jobs. I saw this one, there's this one website that was like, you take tests and things like that. So like the website verifies that you're a real person and that you have those skills. And I haven't done that one. I should probably do that one. Be nice to people? No, thank you. Listen, I am boundedly nice is what it was. Do you get what I mean by that? So like, the efficient market hypothesis, part of the efficient market hypothesis is that like all agents in the economy are rational, profit maximizing entities. They're trying to make the most money possible. And the problem with that is that like your ability to do the perfectly optimal rational thing is limited. Like you might not have all the information that you need to do that. You might not be sophisticated enough to calculate the optimal value. You might be prone to certain heuristics and psychological biases and things like that. And so what we find instead is that people are boundedly rational. And so what we can do is we can kind of like model the heuristics that people are using because they want to be rational, they want to do the best thing, but they might not possibly be doing it. So like a good example of it is they did this study where they kind of said, let's make an economy and we'll just have like each household determine how much they're going to save. And they're going to determine that based on what they see other people doing. And then when you do that, you get economic cycles. And it's very interesting. And if everybody just does because like economists have this number that's like, this is the optimal number for people to save, right? It doesn't work. The economy falls apart. Okay, so people are boundedly rational. I am boundedly nice, which is, generally speaking, I'm a more friendly and nice person than other people. But I am prone to certain psychological biases, my own neurochemistry, things like that. One of those things is that I just have an extremely low tolerance for bullshit. A lot of narcissists and psychopaths and those sorts of people really, really hate that. Because what they want to do is they want to come into my channel and they want to try and gain everybody's trust and elevate themselves and promote their product or feel good from the social praise or whatever the deal is like that, right? And then when I immediately come in and I say, no, what you're saying is dumb, they hate that because they can't, they're only been in there for like 5 minutes and they immediately get called out. Yes, if you're a narcissist, you're probably not going to enjoy this channel. You're going to be like, Seth's too mean, but it's not that Seth's too mean. It's that Seth's too good at sniffing out narcissists. Yeah, you cannot continuously call people stupid, naive, etc. and accept the good. I can. Because people that are stupid don't benefit the channel at all, and they can all go away. So I don't need to get everybody. I mean, that's kind of not really a practical way to run things anyways. No. There you go. I haven't gotten any negative vibes even though I'm a newbie here. I just think he works in facts and evidence and is critical. Yeah, thank you, Pencil. That's exactly it. It was like, what has actually happened is I've been through it all, right? I've been through it. Like, I've been doing this for 8 years. I've been in the market, like watching the market since 2008. I had all of these ideas. I've read all the technical analysis books. I won contests with my technical analysis, right? And then after a long enough time, it basically became undeniable that didn't do anything. It wasn't effective. And I had to go back to like, what can we actually prove? And all of a sudden it opened up a completely different world that your ability to profit as a retail trader is extremely limited. But at least you understand what's going on. And your chances are a lot better. I certainly say I definitely perform a lot better than I did when I started this channel. And that I did when after COVID. And so I do. I try and keep it empirical. And the majority of retail traders don't want to play in that world. They want to continue to live in denial. And yeah, it's going to rub some of them if they don't have the humility to sit down and say, maybe this guy has been around longer than I do, seems to understand these things more than I do, claims that there's empirical evidence, maybe he actually knows something. And if you're the kind of person that's like, I'm the greatest and I know everything because I made money from trading in the past, then you're probably going to hate it here. And I'm like, great, go away, because I don't want those people, Another great little psychologist who has so much to say and knows you so well. I know, right? I mean, he is definitely giving. See, I think that the thing that is frustrating Tilt is that he wants to continue to try and infiltrate the channel every day. And we immediately pick him out, like from the first sentence. We're immediately like, that sounds like bullshit, right? So he thinks he's trying to iterate. Like, okay, Seth talked about empirical evidence, so I'm going to claim that I have empirical evidence, but not show him. That's what he's doing now. Okay. See you Monday. Stay excellent.